Here in the studio. Sandip, hi, good morning. What's happening in the market? Doesn't seem like the market is too enthused about the few odd earnings that we've seen so far.
So I think right now what's happening is that the funds flow is dominating. So earnings picture looks fine. So I think IT companies have done better than the subdued expectations, and there's no negativity because of that. Some smaller financials have reported, which have also been okay. So now I think the major results are still awaited, but I think it's more to do with the incessant foreign selling, because I think last trading session foreign investors sold almost 4,000 or 5,000 crores again. So I think that's what is impacting the markets right now, rather than the earnings in specific.
And do you think this Tiger Global now facing that 14,500 crore rupee tax claim over Flipkart may just make things worse for FPI as well as FIIs rethinking their India tax strategy?
So I think as it is, tax changes has led to a majority of these outflows. So as the rupee has been depreciating, on top of that you have higher taxation. So investing in India becomes less attractive for many foreign investors. Now this is a Supreme Court ruling, so there's little one can do about it. But it might not be the same case for foreign portfolio investors as has been the case for this, because this was more a operational entity where obviously there was no operations in Mauritius. So I think there the grandfathering clause was built in. So I guess that will hold. And incrementally, I don't think it should have any significant negative impact. If it had gone the other way, maybe it could have had an incremental positive impact. It's just that foreign investors are following markets where the performance is there right now. So a majority of emerging market funds are flowing into those markets, and the prime among them obviously is Korea, where the markets are rising every day.
Okay.
Is the IT piece, both TCS as well as Infosys, and how do you think the markets would make it? I mean, Infosys ADR jumped, I think, what, 10%, right?
Yes.
Day before, yeah.
So I think that's the structure of the market. Expectations are low, so wherever delivery is higher than expectations, so the positive reaction is looking much better. And so I think that could happen with many other companies also. Overall, I think the picture is stabilized, so we are no longer looking at a phase where there will be no growth. So I think from a no growth scenario, we are moving to a 4-5% growth kind of scenario. Whether it can accelerate further from there is something we need to see. So I think if the assumption is that we are moving to a 4-5% growth scenario next year in general for the overall industry, some companies obviously will do better, then the valuations more or less factor that in. So I would say that for the larger IT companies like TCS, Infosys, etc., there's no significant upside and there's no downside also. So I think they are more steady companies. So if they give some decline on some market sell-offs, etc., then people can buy them as low-risk investments for maybe 10-15% kind of return, not more than that.
Kunal, you are though still bullish on the prospects of IT, right? And you believe rebound will hold?
Yeah, largely I think the rebound should hold for IT names. It's just that the last, I think 1 week or so, there was a bit of a no movement, price correction, mean reversion, for the IT stocks. But I still believe that the larger structure for many of these IT names is very strong. In fact, the mid-cap IT stocks, they were the ones which had actually taken a beating in the second half of the month of December. Coforge, Persistent, etc. They had fallen down by more than 10-15% in a matter of, I think, couple of weeks. Those stocks have also managed to show signs of good recovery. So it tells you that the larger structure for these IT stocks have been positive, even within the face of a little bit of volatility in between.
Okay, some real estate stocks also in focus. We'll come to Geo Financial in just a couple of minutes. Ravinder here with the details with regard to the likes of a Prestige. Strong updates coming through. Ravinder, how exactly are you penciling in those numbers? Give us an outlook of how those numbers have played out Q3 FY26.
Well, as Prestige Estate reported a strong Q3 FY26 business update, and in Q3, company recorded a highest ever pre-sales and collection for the 9 month of financial year for FY26. And if we talk about the pre-sales, then in Q3 FY26, company reported pre-sales at rupees 4,183 crore, which saw an uptick of 39% year-on-year basis as compared to estimate of 4,000 crore. And for 9 months of FY26, company reported a pre-sales at rupees 22,327 crore, and company has given a guidance of 27,000 crore for the full year of FY26, and company has achieved approximately 83% in the first 9 months of FY26. And if we talk about the collection, then in the quarter in Q3 FY26, the collection stood at 4,547 crore, which saw an uptick of 40% year-on-year basis. And this growth is led by the strong demand in the real estate sector. And for 9 months of FY26, the collection stood at 13,283 crore. And and if we talk about the launches in the Q3 FY26, then the launches was at 5.02 million square feet, taking the total launches for the 9 months of FY26 at 23.83 million square feet. And the cumulative GDP of the residential launches during the 9 months was at rupees 19,619 crore. And during the Q3 FY26, the company completed 4.72 million square feet, taking the total completion for 9 months of FY26 at 12.71 million square feet. And if we talk about the office portfolio and retail portfolio for the Prestige Estate, then the office portfolio was the leasing activity during the Q3 FY26 stood at 0.56 million square feet, and exit rental for the office portfolio for FY26 to be 828 crore. And for the renter portfolio, the total mall footfalls during the Q3 FY26 stood at 5.2 million, and exit rental from the retail portfolio for the FY26 are expected to be 275 crore. So a strong set of Q3 FY26 business update of the Prestige Estate.
Sandeep, thank you firstly so much, Rabinder. Sandeep, coming to you with regard to some of these real estate updates. Some of them have been impressive, some of them have been on the softer side, relying on Q4. For example, a Keystone, they have to do 50% of what they've done in Q1, Q2, Q3 to hit Q4, but fairly confident on hitting that number. And this is the Mumbai market that we're talking about. How do you look at the numbers, and would you suggest that there is an opportunity to buy in real estate given the kind of fall we've seen from the highs?
Yeah, I would agree with that, because what's happening is that there was an expectation that real estate sales are slowing down and many of these companies will not report decent numbers. Now, because of what's happening on the IT side, job losses, etc., so that stories got built up. But I think that the interest rates and the easier monetary policy is supporting real estate, and that always happens. So given the updates which are coming from most of these real estate companies, and the fact that the rental market is holding up, so many of these companies which have got a strong rental portfolio and income comes from that, I think those companies are much better placed also. So the larger companies which have corrected, and some of them are at 52-week lows, so I would think that they offer value at this price.
Very interesting. There was also Geo Financial. Numbers came out over the last day or two. Mitali here with what those numbers look like. Mitali.
Right. So if you talk about the geo-financial numbers for Q3, we saw a mixed set of numbers for this quarter. There was a pressure on the headline profitability in spite of growing momentum in their underlying business. Talking about the revenue, it was a decline of 10% on a quarterly basis, while the expenses nearly surged 30% quarter on quarter, impacting the margins. The net profit, it fell sharply around 61% on a quarterly basis, and this sequential decline in the PAT was primarily due to the absence of the dividend income in this quarter as compared to the last quarter. On the positive side, if you see the core lending metrics, they remain strong. The net interest income, it rose around rose to 165 crore rupees, up 18% on a quarterly basis and 166% on an yearly basis. The AUM expanded nearly 29%, with their disbursements increasing 30% quarterly and the lending rising around 29% on a quarterly basis. So we see growth in the NBFC loan book and traction in the payments, insurance, broking and the AMC businesses. So importantly, management reiterated that the operating income has now now overtaken their treasury income, marking a key structural inflection point for the company's business model. So in summary, if we see, while the near-term profitability took a hit, but overall the core operating momentum of the business remains strong.
Okay, thank you so much for that, Mitali. Momentum remains strong both on the lending side as well as they've got the mutual fund lever also, which has started or kick-started operations. Would Geofinance interest you at all, Sandeep?
Exactly, because a majority of the valuation lies from the treasury book only.
Correct.
And the operating, so the operations are still limited, and it's not a business where there are no significant players and you can just scale up and capture market share. So I think there are entrenched strong players and there is no regulatory arbitrage available. So I think Geo Financials will have its own growth path. The growth will look strong because the base is so low, but the valuation still look high.
But 20% growth QOQ on the lending book.
Yeah, because the book itself is so
It's
small.
very small. Yes, that's true. Okay. You know, the other one in focus was in IndiaMart Intermesh, and completely different reasons from what we've been speaking about. You have Nalanda Capital, which has picked up a stake, 250 crore in IndiaMart. This has obviously made headlines because Nalanda, known for its deep value picks and very, very rarely makes those investments. Sandeep, your take with regard to this? The internet is abuzz with regard to this one. So talk to us about what your take is. At this price, is it a good time for a retail investor to buy it in?
So I think they've been losing, so the customer growth has moderated, they've
Yes.
lost customers. So the flow of income, obviously, if you look at it on a, so the way they report earnings and the way actually the value gets captured is different in this company. So I would think that there are no visible signs of a pickup, but I think maybe whoever is picking it up is taking a very longer term view on a stock which is again near its lows. So I think people who are willing to wait out for 2-3 years without looking at a few quarter earnings, they might be looking at an economic up move and then this company also doing well.
Well, the markets may be doing what they're doing, but some of the capital market plays, their earnings and profitability looks quite good. I was just looking at ICICI Pru AMC, 361, Angel One, operationally a very strong quarter. All their numbers look fabulous right now. Sandeep, do you think that capital market plays which have been a little abated may come back to the fore, given that earnings have been strong?
So I think many of the brokerages which rely on broking income largely, so I think there until the markets pick up, we could see earnings remain subdued. But the asset management company results have been pretty good. And the AUM growth also is at a steady pace. So I would say that because those stocks have also corrected, so I think there is greater value in annuity plays in the capital markets rather than transactional plays.
Yeah, absolutely. And yeah, given the tide in the market right now, that's definitely not favorable as well. But the one pocket which has been doing very well, and that's been the case the last couple of trading sessions, has been PSUs as such. And I'm not talking about PSBs here, but just PSU, the entire cluster, X of banks. Look at an NTPC, look at an Oil India. MRPL came out with a fabulous set of numbers. That was looking good. BEL, of course, is one such case which has been going strong from within the defense pack. And Kunal, we were talking about as to how some of these PSUs are coming back to the fore. NTPC, REC, PFC, all these sleepy stocks are making a comeback.
Yeah, it's a good line that it's a sleepy stock. You know, these are the kind of stocks which had done very well in the 23-24 period, and then somehow in 25 when these stocks went to a correction, you actually saw many of these stocks going into a massive consolidation, and that too in a very tight kind of a range. So it was like a 10 to 15% band range for Coal India, ONGC, NTPC, GAIL, etc. And it's good to see that these stocks are now trying to make a comeback. Many of these stocks have come back to their multi-quarter highs, and the volume participation in the last 1 week, 1 month has improved significantly. Of course, with the fact that the stocks are coming out of a consolidation, this entirely I think should augur very well for the entire sector as well as for these individual stocks, because you would probably expect that once these stocks gain momentum, it may not be a short-lived momentum like what we see for the other high beta sectors, and this could probably be a start of a new trend for many of these names.
Sandeep, I wonder if PSU banks feature on your list, because some of the numbers have been very impressive with regard to how PSU banks have played out. Margins have in fact improved, and therefore that flattish to maybe slight negative bias to margins doesn't seem to have come through at all. And ROAs have held up very, very well. So I'm trying to understand whether structurally PSU banks are something that you're positive on over multiple years versus private banks. How do you view that?
So I think over long periods of time, the choice is very clear. We play the private sector side. So the only PSU we own is SBI, because I think that's where they are not losing market share on the deposit side. See, the challenge for the banking sector is deposits. Who gets the deposits? And I think in the younger generation, Gen Z, etc., no one is opening accounts with PSU banks. So I think over a period of time, the challenge for PSU banks will be getting the deposits for growth, as the deposits will gravitate towards private sector banks.
Kunal, do you also believe that it's more of a tactical play than a long-term structural story in PSBs?
I think many of these stocks are actually showing signs of a long-term breakout, led by, of course, and it's a perfect, moving characteristic. You need a leader to identify, and that leader takes the charge. 825 was the breakout point for SBI. The moment the stock had managed to break out, it just, gave a lease of life for the entire PSU banking names. And you saw fresh breakouts across the board. You don't see, I think, except for one or two PSU banking names, not too many banking stocks are left behind. All of these stocks have participated in the last 3-4 months, and by a margin of 20-25%. And these stocks have come back to the 2024 highs, many of them. So it's a classic move as such, technically. And I would probably expect that this move should sustain.
Metals, that's the one space you can't get your eyes off. It may be a minuscule of a red tick on silver this morning, but that can be completely ignored. I mean, look at Tata Steel, look at Analco, Vedanta, the entire pack, and look how the performance has been not just this week, but how they've performed in the last quarter as well. Sandip, still bullish on metals?
So I think metal stocks obviously have a sort of leveraged impact of the underlying price movement, and because the metals have done so well, so we are seeing this kind of movement in these stocks. So this could sustain. The only challenge is that many of these commodities seem to be in a parabolic up move, where I would say that the corrective move is somewhere down the line, and when the correction happens, it will be quite severe. So I think that's the risk for people to buy metal stocks now who have not bought earlier.
Kunal, of course, is of a different belief. Kunal thought that silver is going to consolidate.
Yeah, I expected
Start of the year,
250,000.
not happening anymore.
It's not happening. But no, in all parameters, statistics, I think we've entered into that very high octane range for silver prices. It has to cool off somewhere down the line. Whether it happens at hitting 3 lakhs or not, that's a different case altogether. But I think we are in that very euphoric kind of a mode already for the silver prices.
What about copper? Is that also behaving the way silver and gold were, say, about 6 months back? And do you see copper also in that kind of a frenzy?
Copper's chart is a more realistic chart because, realistic I call it because there was a phase in the last, say, 2-3 months or 6 months period that there were two phases of a 10-15% kind of a correction for the copper prices. And the charts are, there was a point where the copper prices were overbought, dollar prices around 45-50 few months back. It came down to almost 10-15% correction. Went back into a uptrending mode, managed to break past, I think, the $50 mark. So the prices over there, the charts over there for copper are more realistic. It looks like that this trend is sustainable. But for silver, it's been a euphoric price. Just statistically, I think the silver prices, both on dollar as well as on the rupee terms, is hitting a band of 3 to 3.5 sigma already at current levels of 2,85,000 on the rupee terms.
Just want to talk about Reliance. Sandeep, the numbers are today, and given the underperformance in the stock, do you think there could be any announcement that could lift sentiments here?
So not announcement, but I think given the way the results of MRPL came out, so I think the refining side, O2C side could do very well. People are skeptical on the retail side, so I think that's where there could be some downtick, but telecom should continue to do well. So given that the stocks corrected almost 10% in the near term, I would think that at these prices it looks decent. So how the results will be and how that will play out, we can't predict. But overall at current levels, the stock looks decent.
Yeah, 1450 thereabouts for Reliance right now. But Sandeep, good to have you in the studios. We'll let you go on that note.